In this video, we're going to be talking about supply and demand. I had someone recently text me and asked me how to determine supply and demand, and some things about point of interest we're going to talk about later, POIs, and then we're just going to talk more about later, and then we're just going to show some charts and stuff like that. Okay, so usually when you think about supply and demand, most people know the retail version of supply and demand, where it's like multiple areas, multiple taps at an area like this. So some people would call this like a, either like, most people think about supply and demand as a resistance zone and stuff like that, and it's not really like that. That's not the way you want to think about supply and demand. Most people think about this as a supply, and then once it passes area as a demand or a support, or support and resistance, and that's not how you want to think about it. Supply and demand is areas where banks, institutions, hedge funds, whatever you want to call them, where they have accumulated orders. So something like this, where they have accumulated orders or distributed orders. So this would be a level of supply because we had an accumulation here of orders. This would be a level of supply, accumulation, or vice versa, you would have distribution. Distribution would also be this would be a level of demand. I'm sorry, demand, because we're talking about buys. Usually when you're talking about buys, demand. That's the level of demand. Sorry about that. And then the distribution would be a level of supply. So when you look at distribution, this is an area where market is distributing orders. They're getting out of positions and putting sell positions in. And then when you look at accumulation that I just shown, it'd be a level where market is getting out of their sell orders and they're accumulating positions, placing new orders in. And then you also have reaccumulation. That's another level of supply. And then you also have redistribution. And then we're going to show some examples of that in a minute. But those are your levels of supply and demand. Those would be your most accurate ways to identify supply and demand. Just look for accumulation or distribution somewhere where the banks have placed some type of orders to cause a move or to cause a violent move. Those would be your supply and demand levels. And basically what you want to do with that is you want to just mark them out. And when the market gets to that area, you could look for a precise area inside of that demand or supply and wait for the market to get to that area, and you should wait for a reaction inside that area, which will be known as your point of interest. But we'll get into that more in a minute. So we also have the reaccumulation. Let's say you have something like this. I feel like some people get really confused about this when choosing supply and demand. Let's say you have something like this, where you have the market accumulated, but then you have something like this, okay. I'll put this like right here. I'm gonna straighten this out. I messed it up a little bit. Okay, you have something like this, and then when you see the market coming back down here, when you see you have something like this. This is a little ugly, but don't worry about it. So we have that the market accumulated right here. This is a level of demand, right? Smart money traders and Wyckoff traders, you're familiar with accumulation and reaccumulation. This is known as a reaccumulation. This is a level of demand, yes, but you also know that you have, I'm gonna use this here. You have this imbalance in between here. Okay, now when you see the market start coming down, you'll have the instance where some people will they'll have a point of interest inside of here and wait for the market to come in here. But you have to realize that we reaccumulated. we're creating another level of demand. So instead of the market coming down here, we would have the instant where the market just come over here and then we continue. And then that'd leave people wondering, oh, why did the market come back to my level of demand? Well, it's because the market created another level of demand with the reaccumulation. Remember, demand is where the market placed orders, accumulated orders to get a move. So if you see that the market accumulated here and they ran to the upside, rather than them coming down and mitigating these orders, meaning they don't have to, the market doesn't always have to mitigate orders. So sometimes you'll see an order block, I'm gonna use just order block for example, that doesn't get mitigated. The market, the banks, they don't have to instantly mitigate orders, because if you're thinking about it, they can mitigate the orders whenever they want to, because their pockets are endless, so they don't really care about drawdown. So like I was saying, when you see this reaccumulation, when you see this accumulation, and let's say you was looking at this right here, and yes, when, like in this instance, if none of this happened yet, in this instance, you would look for entry down here and look for a last point of supply to happen, and you'd wait for the move like this. But let's say you didn't get it and you see something like this. Know that this is another area of demand. So your focus has shifted from this area to that area. This is your new area of demand, and you would look for entries instead of here, because realizing this, we had a creek here, and you know that this is another level of demand. It's the same thing for supply. The redistribution is vice versa. It's the exact same thing. And then we can talk about point of interest. Point of interest is it's not really anything confusing. It's really exactly how it sounds. It's just an area that you're looking at. That's basically it. Usually my point of interest would be like, let's say, I'll do a distribution. I'll do a fourth drive. Okay, we're gonna stop it right here. So let's say we have this distribution. My point of interest would be somewhere up here, or this whole block right here. Let's say it was this whole block. That'd be a point of interest. And basically what that means is I'd be looking for the market to come back into this area, and I just wait for something to happen inside this area to get a move down. That's basically what a point of interest is, and that's all it is. Just an area that you're looking at for the market to get into, for you to look for another move. That's all it is. Now, I have a decisional point of interest. There could be decisional point of interest as well, where you have something like this. Something like this. And then you'll push down. Okay. I'll show an example of this as well. Okay. Sometimes you have the instance where you have a point of interest up here, and then you have another point of interest. Usually it's where you have different order blocks. So let's say you have an order block up here, and then you have another order block in the middle. This would be a decisional point of interest, which is, it's not an area. It's a point of interest, and it could also be a supply area, but it's not as confirmed as this area. So this one is a major point of interest for me. The color coding is personally is like, I do it. It doesn't matter. It doesn't matter. It depends. Oh wow, I'll look at that later. It really doesn't matter. It depends on what colors you want to choose, but I just put it as red and yellow. So the red point of interest, usually when I have a red point of interest, it's a point of interest inside of a supply or a demand zone. And then the yellow ones are usually outside of a supply or demand zone. So the decisional ones, I would never set a limit there. Usually inside the supply and demand ones, I don't set a limit either. But the decisional one, I would never set a limit. I'd actually wait for the market to come inside the area and then see if we have something inside of here. Because sometimes with this not being in a level of supply or demand, you could also have to where it just continues up and then we get to move down. But also sometimes you could have to where we get something inside here and we just continue down, making this another level of supply. That's all supply and demand and POIs are. Just remember, supply and demand has to be an area where the market has accumulated orders or distributed orders or some type of form of orders is getting inside of that area. Sometimes supply and demand can also be inside of a sponsor candle or order block, as you want to call it, but it really depends. You really have to see a violent move from that area. Okay, hold on. Yeah, we're just gonna keep it simple like that. We're not gonna get too much into it and make it too confusing. Let's go to the 4 hour. Okay, looking at this market here. Up here, there was a type 2 distribution. And then look what we did. I'll show you. After this, we came down. We created a redistribution. We created a level of supply and we went down. Came back up. We tapped and mitigated the breaker of this, create another level of supply and continue down. As so. And you see how the redistributions look almost identical. You can tell this was a redistribution of orders. The market did not want to go back up here or mitigate this, so they continued down. They created the level of supply here. They created level of supply here. Now, this is our most recent level of supply. And talking about the point of interest that I was talking about before, the red one here is a 4 hour. Inside of here is just the completion of this imbalance here and then the last candle right here, which caused us to move down, break structure. A simple 4 hour supply. It's based off this candle right here, which was our last buying orders before we got this whole sell down. And then this area here is a 1 hour decisional point of interest. And you can see in this decisional point of interest, we got a reaction inside of here. So we could have the instance where we just don't go up here into the supply level and we just continue down. So that's why I always mark out the decisional point of interest as well, because we could just react inside of there and just not go to the supply zone and create another supply zone. So just mark out your point of interest and wait for the market to show you what it wants to do. So even if the market buys over here and then we get into this area of supply, I'll be looking for sells right here because I know this was a redistribution. I know there's orders over here that the market might want to mitigate and we could get another leg down. Or if this area were to break, then I'd just be looking for a whole another demand that was created here that created the move to break this level, and I'd wait for a buy into this supply zone. There was a trade inside of here that I wanted to go over, but I never got a chance to record it. Yeah, okay. All right, boom. This is a decisional point of interest. Why is that a decisional point of interest? Because we have all of this imbalance here that the market could just come down and fill. So this is not the last point where the market has to react off of. And I know this area here, there was an accumulation of orders. Inside of there, you can just see it. You can also see that this candle came down and took the liquidity of both these two candles. This candle came down and tested this area right here, making sure there was nothing left, and then we just took off. So this would be an area of demand. Now, without the replay mode, we see that this area broke, but inside this area, we created a redistribution. We created a supply, and right here that I marked out. But we're gonna go over inside this area and look to see how you could have caught a good trade inside of that area here, even though this area at the end failed. So we're gonna zoom in and go to the 1 hour. Now we know that this is just a decisional point of interest because it is a 4 hour order block. And it's not just a regular order block. That's the thing about order blocks. When people look at order blocks and sponsor candles, they just take any order block. You don't just take any order block. Any candle could be considered order block. Thing about this one, why I knew that the market would react off this area is because this happened pre-London. This happened right before London session, and then we got this big move to the upside. Usually order blocks, like good and confirmed order blocks, like order blocks that you know you'll get a reaction, will usually occur pre-London, before London session, open of London session, or you have open of New York session, or you're gonna have end of London session into New York. You also have the overlap as well. Those are good order blocks that you want to look at for those areas, because usually before the session, the market, they like to manipulate, and this was the manipulation before the move. So I'm trying to keep it simple, not say too much, so I don't confuse you guys. But the area, basically, what I was looking at in this area is I was looking for buys here. One, I didn't know the market was going to continue down like that, so I wasn't worried about that. I didn't know that. Two, we had equal highs. So before the market even came down here, we got up here and we created equal highs. The market purposely made these equal highs so we could come take them. You guys have to see how the market just creates liquidity and takes liquidity. That's all it does. And we only got this move up just to get more people to sell. As a retail trader, you're looking at this and you see the market come here and you see this wick. Of course you're gonna sell. Retail trader, of course they're gonna sell. So that was the purpose of that move. Let's see if the market will get into this real quick. Okay, the market hit your point of interest. Now what? Let's watch the market a little bit more. Okay, you're getting reactions off the point of interest. All right. One thing I want you to look at the time of this. That's the first thing. Before we even zoom in inside this, look at the time. This is UTC -4, so it is New York session. It is New York session, yeah. This is around 9 a.m. to 10 a.m. that we're reacting inside this area. Before I even zoom in here, you can see that we're accumulating inside of here. I'm gonna zoom in and we're gonna mark it out and everything. But before you even mark out accumulation, you should already be able to see it with your eyes, because accumulation and distribution is just a form of accumulating orders. So we're gonna understand why the market wants to accumulate at this area, or why it wants to distribute at a certain area. So let's think to ourselves, why would the market want to accumulate here? Well, we know we have a 4-hour point of interest where there was recent an accumulation and manipulation of orders inside of here. We have equal highs that we want to get to before we even either continue up or push down. That's another reason. So just really, when you see the market move, try to understand why is the market making that move. What's the purpose? What's the reason? Where's the market looking to go? In this instance, we knew the market was coming up here. So let's zoom in. Let's go to the 20-minute. All right. Now, the more I zoom in, the more you're starting to see this accumulation. Minute. We also had a accumulation inside of here as well, right here. Okay, we're gonna leave it right here, and then let's mark it up. So something like this. The first thing we see is we have this trend. When you see some trend like this, just know there's liquidity on that trend line. So the market was gonna want to take that trend. And then when I see this trend break, that's how I know we're shifting structure. So we have like this descending angle right here that we have on this market here. And when you see something like this and then you see a break of the trend up here, just know you just accumulated, or you're about to shift. The market's going to shift into either from sells to buys or from buys to sells. Okay, just know they're accumulating orders when they're doing this. So let's go over this. We have the market coming down. We have the market coming down. But not only is the market coming down, look how the market's coming down. Right here, we consolidate a little bit, and then we're getting this violent push down to the downside. After that, you see the market just starts to change. The market just starts to show kind of upside potential. You see how the market slowed down from like this like violent move into just like slow structure. And you see how the up candles now are beginning to come bigger than the sell candles. You just see how the market is just slowing down. The bearishness of this market overall, wow. The bearishness of this market overall is just slowing down. So that's a good thing for us. When you see something like that, you see the market is just slowing down into your point of interest. That is very good, which means the market is looking to accumulate some orders inside of your point of interest. So without talking too much and making this long, let's just get into this. Now think about accumulation and distribution. It's really subjective. People don't think it is, but it's really subjective. You could call this as your selling climax, or you could call this as your selling climax. You can call that as your selling climax. It doesn't matter, really, as long as you understand what the market is doing. So, let's go down some more. I can see this really clearly. Okay. We can call this whole area right here our primary supply. This whole entire area. Then we have our selling climax. Like I said, it doesn't matter. As long as you understand what the market is doing, the labeling does not really matter. Automatic rally. Just count this as STs. I'm just put this as a STs just for the STNV and the regular secondary test. And then we have our spring inside of here. Then we have our test right here. I forgot to mark this out. Spring. Okay. Spring, and then we have our test, and then we have our move. Okay. Now let's go over one entry that you could have caught here, which I don't think most people would have caught, but I have to show it to you just in case, because you could have caught it, but it's really kind of a risky type of thing. Not really, but I would have waited for more confirmation. Let's go to the 5 minute. All right, you have this candle. this order block that here that came into this area, and then we have a move from this area. This whole down move is an order block. So what you could have done is you could have took the 50% of this whole move, and after you've seen the market is showing upside potential, you could have taken the 50% of this, and you could have taken a trade right here, which would have lined up with the open of your point of interest, with your stop loss below the body for a 3 pip. That could have been your first. Could have been your first entry. Not personally, I wouldn't have taken it, but it could have been your first entry if you really wanted it. So that's something. But let's look at another thing which we was just explaining, which actually lines up with the lesson of today with the supply and demand zone. So we know that this area here has become a level of demand. We know this area has become a level of demand because we see that we're accumulating orders here. All right. Logically, what you would have thought is for the market to come down. Let's see. Come down, fill this imbalance right here, get into this order block here, and you would look for a trade, right? Well, let's look for what the market did. Oh, look at that. The market said, nope, it doesn't want to come down here, and it just continued. Now what do? Well, like we was talking about before, we have accumulation, and now we create another level of demand here with a reaccumulation. Now we just reaccumulated here. This is what I was talking about, where sometimes you won't see that move down to the area of demand. The market will create another area of demand, which we have done right here. So let's zoom into this and let's just mark this out. And the more you zoom in, you can see how the market made this reaccumulation. We have our buying climax. Primary supply is this candle here. If we zoom in more, which I want to keep it on the 5-minute time frame to show you the entry for this. Primary supply is here. We have our shakeout. We have our STs right here. Secondary tests, and I know I missed the automatic rally. We're gonna do that in a minute. STs. We have our automatic rally. Sign of strength. And then we created a creek. Jump over the creek, making this our last point of supply. So we didn't get a spring in this reaccumulation, and this is the move that we have here. So now looking at this, you see that we've created another level of demand. Where would you look for entries? Entries, you would look at this candle right here. Now, if you go on the 30-minute, this whole thing was a order block. Now, this part really depends on your style of trading. You could have either taken the 50% of this order block, or you could have taken this 5-minute OB right here. I'm not saying everyone would have taken this 5-minute OB, but it's just a area. So let's look at the differences between them. Saying you would have taken the 50% of this, you probably would have hit stop loss on this. Not sure. Hold on. I think there it goes. Okay. My bad. It's not 30 minutes or 15 minutes. So you could have taken the 15-minute for a long position at the top of this at the 0.9950. And this is exactly what I did, because I didn't want the market to miss this. And we're going to talk about it. hold on. So stop loss at the end of this, which would make this a 4 pip stop, or you could have made it a 5 pip stop for extra cushion. So between a 4 and 5 pip stop for that type of entry, just taking this candle itself for a safe entry. Or if you wanted to be aggressive, you could have taken this candle here for a 2 pip stop loss or a 3 pip stop loss, 2 to 3 pip stop loss, depending on you. So the difference between both of them is like a 1 to 2 pip, 3 to 2 pip. 3 to 2 pip stop losses. That's basically the difference between those two entries. And yes, it does make a difference, but no, at the same time, this lower entry is going to give you a better risk to reward, and then the other one is going to give you a slightly less risk to reward. We're going to say, let's say you wanted to be aggressive and you wanted to take this. Now, everything here is confirmed. Now, there should be no reason for you not to take this trade. You have a accumulation where the market slowed down, and now you have a break of counter trend structure, which is showing you that the market is showing upside. Literally, it happens like this. So you have an accumulation. We got to tap in our area of point of interest, and we accumulate at that area. We got a break in structure, a counter trend structure. Then we have a reaccumulation showing us more potential to the upside. Now, you can just set a limit here because you have enough confirmation to set a limit. And where's your target? You're going to target these equal highs up here. It's 37 pips, but look at the risk to reward. And that's the thing about pips and stuff like that. Pips don't even matter. Pips really doesn't matter. It's about your risk to reward. You have 18% that you could gain from this trade with just 37 pips. And I'd rather gain more risk to reward with less pips than try to get like a whole bunch of pips. It doesn't make sense. I'm gonna zoom this up. Let's just see what happens. I have to keep zoning it out because of that. Okay. You activated. You got a second tap. Here. Activate, you got a second tap. This would really be depending on you. If you wanted that aggressive entry, if you have a good broker, you wouldn't have got stopped out here. Dismissed by almost a pip. Almost a pip. Almost a pip. Yeah, almost a pip. Now, if you wanted to be, safe, you could have had a 3 pip stop loss. That would have been down there. But let's say you wanted that 2 pip, which didn't stop you out. And then we're just going to go look at what happened. Boom. Take profit hit for 18 risk to reward. Just off that 36, how much? 37 pips alone for 18 risk to reward. Just off of a decisional point of interest. That's why I marked it out as yellow, because it was a decisional, because we had a demand down here and we had a whole lot of imbalance down here that we could have just came down and filled. And after that, we know what happened. The market just came down and it just continued down. So that was really just a small example. I hope I didn't talk too much. I hope you guys understand what I meant and hope you learned something from this. I'll be looking to drop more videos and see what more I could drop to help people more.